Aldridge speaking. Welcome to the Office of Tax Appeals, May 26, 2021 morning calendar. The time is approximately 10 a.m. If you could mute your mics if you're not speaking, I'd appreciate it. In response to the COVID-19 pandemic, the Office of Tax Appeals will be conducting today's hearing electronically with agreement of the parties. All participants, including the administrative law judges, are participating via Webex. The video will be live streamed to the public. Also appearing via Webex is our stenographer, Ms. Alonso, who is reporting this hearing verbatim. To ensure that we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. Also speak clearly and loudly. When needed, Ms. Alonso will stop the hearing process and ask for clarification. After the hearing, Ms. Alonso will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. To help the hearing run smoothly, please state your name before you speak. Also, do not use the chat function, and please mute your microphone when you are not speaking. Ms. Alonso, are you ready to proceed? Great. Seeing a thumbs up from Ms. Alonso, we're going to be opening the record. This is Judge Aldrich. We're opening the record in the appeal of MMD Incorporated before the Office of Tax Appeals, case number 18011-828. This hearing is being convened electronically on May 26, 2021 at approximately 10 a.m. The hearing is noticed for a virtual hearing. As a quick point of clarification, we are the Office of Tax Appeals. We're a separate agency from the California Department of Tax and Fee Administration, the Franchise Tax Board, and the Board of Equalization. Today's hearing is being heard by a panel of 3 administrative law judges. I'm the lead administrative law judge for purposes of conducting the hearing. I'm joined by Judges Shireen Ridenour and Mike Lee. Sorry. While I am the lead for purposes of conducting this hearing, we 3 will deliberate and decide the issues presented. Each of us will have an equal vote in those deliberations. My understanding is that for appellant, attorney Faith Devine is appearing together with Alexandra Sasha Beluca, CPA. Is that correct, appellant's counsel?
Yes, that's correct.
Okay. And my understanding is that for the California Department of Tax and Fee Administration, hearing representative Randy Salzo is appearing together with tax counsel for Chad Bacchus and chief of headquarters operations, Jason Parker.
Judge Aldrich, can I interrupt for a second?
Yeah.
I'm having trouble with my mic and speaker all of a sudden. Let me try to fix it because I can't hear anything right now.
Okay, we'll go off the record briefly to accommodate this technical issue.
Thank you. Judge Aldrich, can I have you speak so I can test it?
Hi, can you hear me okay?
That's perfect. I think we're all set to go. Thank you.
Do I need to go back to an earlier point, or are you okay?
No, I'm okay. Thank you.
All right, so we're going to go back onto the record. I just asked the department to confirm who is appearing on their behalf. I indicated that the hearing representative Randy Salzo is appearing together with tax counsel for Chad Bacchus and chief of headquarters operations, Jason Parker. Is this correct, department?
This is Randy Suazo. Yes, that's correct.
Thank you. This is Judge Aldrich again. The issue to be decided is whether adjustments are warranted to the audited taxable measure. Is this correct, appellant's counsel?
Yes, that's correct.
And department?
This is Randy Suazo. Yes, that's our understanding.
Thank you. Next, we will discuss exhibits. So CDTFA submitted an exhibit index identifying exhibits A through I. Exhibit A is Appeals Bureau's supplemental decision. Exhibit B is Appeals Bureau's decision and recommendation. Exhibit C is a petition for redetermination. Exhibit D is a notice of determination. Exhibit E is a re-audit work papers and related forms. Exhibit F, original audit work papers and related forms. Exhibit G, department's response to opening brief. Exhibit H, department's additional brief. Exhibit I, statewide compliance and outreach program lead. Appellant submitted an exhibit index identifying exhibits 1 through 12. Exhibit 1 is report of field audit for 2013 through 2016. Exhibit 2 is appellant's general ledger for 2010, together with supporting bank records. Exhibit 3 is appellant's general ledger for 2011, together with supporting bank records. Exhibit 4 is appellant's general ledger for 2012, together with supporting bank records. Exhibit 5 is the affidavit of Valentina Alberti. Exhibit 6 is the affidavit of Uriel Valenzuela. Exhibit 7, copies of sales tickets not used to record sales. Exhibit 8, federal tax return for 2010. Exhibit 9, federal tax return for 2011. Exhibit 10, federal tax return for 2012. Exhibit 11, decision and recommendation dated November 17th, 2016. Exhibit 12 is CDTFA response to appellant's opening brief. So during the pre-hearing conference on May 5th, 2021, the parties had no objections to admitting the exhibits identified in their respective exhibit indexes. On May 6th, 2021, the minutes and orders, I indicated a deadline of May 11th, 2021 for the last day to submit additional exhibits. I'd like to confirm that neither party has submitted additional exhibits since the May 5th, 2021 pre-hearing conference. Is this correct, Appellants Counsel?
That's correct, Your Honor. And I only want to just add one thing. I think in the pre-hearing conference, we had no objection to the exhibits, but we, reserved the right to object to the accuracy of the records.
Understood. And the department, is that an accurate representation, or did you have additional exhibits since the May 6th minutes and orders were issued?
This is Randy Suazo. We have no further exhibits, Your Honor.
Okay, and Appellants Counsel, do you have any objections to the admission of the proposed exhibits? You indicated that
I can't hear you. Did you kind of stopped in your sentence?
Oh, sorry. So I was asking now at the hearing, did you have any objections to the admission of the proposed exhibits from the department?
We don't have objections to the proposed exhibits, but we obviously have disputes over the accuracy.
I understand.
Okay.
And department, do you have any objections to appellants' proposed exhibits?
This is Randy Suazo. We don't have any objections.
So the proposed exhibits are now admitted into evidence. So as far as the hearing format, we plan for the hearing to proceed as follows. Appellant's opening statements, which we estimated at 60 minutes. During that time, appellant's witness will provide testimony under oath. Next, the department will present a combined opening and closing for approximately 20 minutes. And appellant will then have 5 to 10 minutes to close or rebut. Please note that the department may ask questions of the witness, and also the panel may ask questions of either party or the witness. Appellants Counsel, you may begin with either your opening presentation or witness testimony. With respect to the witness testimony, the witness may testify in the narrative or through questioning. Before we proceed, I would like to swear in Ms. Beluca. Could you raise your right hand? And Ms. Beluca, do you swear or affirm to tell the truth, the whole truth, and nothing but the truth? I'm sorry, if you could unmute your microphone and provide your answer.
I do.
Great, thank you very much. Appellants Counsel, if you're ready to begin, please proceed.
Thank you, Judge. I think I'm going to start with the opening presentation, and then I will then hopefully try to reduce the 60 minutes that we thought we needed. And then if necessary, then I will ask Ms. Beluca to testify. So what I want to do is sort of want to start with just giving a background of my client, the appellant. As you know, they are they were a medical marijuana dispensary at the time of this audit, the 2010 to 2012 audit. And they were audited 2010 to 2012. They were audited again in 2013 to 2016, and they were audited from 2016 to 2018. The last two audits were clean. The department accepted their tax returns and their reported sales as completely adequate. They are a company that complies with the law. They've been compliant. There's no issues with any tax issues other than what happened in 2012 to 2010 to 2012, which is the current audit that's in dispute here. So I just want to give that background for purposes of before I start. So what I want to get into is what we can all agree on, because from my perspective, there's a lot that the department has admitted to here that we can use to come up with a number that's far less than what the department has come up with in their appeal. And, you know, they started this audit coming up with a figure of $4 million in unreported sales for 2010 to 2012. Then they reduced it down to 2.3 million or 2.2, roughly 2.2 million. But I mean, our position is based upon the admissions and statements of the department that these sales should be far less than what they've come up with. And where I start is we all agree on the reasonableness standard here. Like underlying this whole dispute is that the numbers that the department has come up with have to be reasonable, whether the burden is on the department or the appellant, because they're shifting burdens, really is not a significant issue here, because I believe that the evidence shows, you know, based upon the department's own admissions, that the sales figures that they've come up with in this audit are completely unreasonable. And this is how I get there. I use their statement. And the first statement is from the, and I'm trying to reference, like, it's our exhibit 1, which is the 2013 to 2016 audit. And I'm referencing page 33 because I looked at the PDF document, and if everybody's looking, you know, on their computer, it would be page 33 of like our whole compilation of exhibits. And this is the quote from the auditor that did this 2013 audit. And he says, "The books and records are adequate for sales and use tax purposes." Admission from the California Department, or at that time it was the Board of Equalization, that's the admission that they believe that the 2013 records of MMD, my client, are adequate. Okay? So that's the first statement. We all agree on that because that's their own statement. So then we get to what really is the underlying issue here, which is that the department concluded that my client's sales records from 2010 to 2012 were inadequate, and that the only method of proof that they could use was the observation test. Now, we do have some issues with the observation test, which, you know, I'll get into later, but if you take what they say, which is that we had to conduct an observation in June of 2013 and estimate what the sales were of MMD in 2013, or at least the first or second quarter of 2013, that they had to extrapolate and come up with a figure as to what the sales were in 2013, and then use that as their benchmark to go back and figure out what the sales should have been in 2010 to 2012. And so, you know, I'm looking at their admission here, and and I'm going to page 642, which is part of the compilation of exhibits. And it's the reply, it's the opening brief, the department's opening brief, where they basically talk about the fact that they had to go to 2013 and use 2013 sales figures in order to come up with the 2010 to 2012 reported sales, how they came up with that. So they claim that because the appellants reported sales in 2013 were roughly 68,000 per quarter, which is almost like identical or similar to what the sales were in 2010 to 2012, that's a justification for using the 2013. Here is that the observation test that they used comes up with the sales figures that are far higher. Like they came up with 4 million in sales, but yet they've already admitted that the appellants' books and records for 2013 were adequate. So why don't they use the appellants' books and sales for the 2013 year to come up with this estimated number? I mean, it really, their own admission, it's inconsistent, and it shows just how unreasonable this observation test was and the numbers that it came up with, because they're presuming that the appellant's books and records for 2013 were not adequate in order to come up with this number, but yet, you know, they've already admitted, a different auditor already admitted that the sales records were adequate. So if you're going to use 2013 as a basis to come up with what they believe are the sales for 2010 to 2012, they have to use what they've already admitted is adequate, which is the appellant's 2013 records. And they admit that the appellant's 2013 records show 68,000 per quarter. So based upon that we believe that the proper adjustment here should be at the very most 68,000 per quarter. And if you go back and multiply that by 4 quarters, that's $272,000 for the year. And so 272,000 times 3 is about 816,000. So that's what we believe. If you rely on the department's own admissions that the appellant's records are adequate for 2013, and that's what it should be, 816,000. But they've come up with 4 million, and then it was brought down to 2.2. But we think it needs to come back to 816, which would be consistent with their own admissions. Okay, so that pretty much is the heart of, you know, our argument on reasonableness here, and we've been trying for quite some time to explain this, and it's been very, very difficult, and we're hoping that it's becoming clearer as we move on. But I mean, even so, that's just, we get there with their own admissions, like that's what we agree on. Okay, we don't necessarily agree with their position that, number one, the sales records for 2010 and 2012 were inadequate. And, you know, the reason why we take issue with it is because the department seems to rely on the fact that because sales tickets were missing during those years, because they didn't have a point of sale system at the time, it was early on in the appellant's business, so they used like hand, you know, sales invoices and sales tickets. And so they're saying that because those sales tickets are missing, we had absolutely no choice but to use this indirect method of proof, which is this observation test that came up with this huge number, which is inconsistent with what the records in 2013 show. And so the appellant, during the audit process, explained the missing tickets, okay? They explained and showed that a lot of the tickets were used to make notes, record inventory. And we provided that evidence, which is marked is it's in our exhibits, and I'm referring to it starts at page 524 and goes to 552. That's in our PDF, the compilation that OTA prepared. And so if you look at all those tickets, you'll see that all of those tickets show there's a notation, like there's one notation that says Subway, $14. Like, well, obviously they went to Subway to get sandwiches and they wrote down $14. There's inventory. It shows like it'll have like tickets on and notations on there that say inventory. So the appellant explained and showed why there's missing sales tickets, and it's not, it's not something that's uncommon. Like, I know that when I have a legal pad and I'm in the middle of something and somebody calls me, I'll write something down on the pad and then I'll take out the paper. I mean, it was a legitimate explanation. And in addition to that, there were 2 affidavits of employees, and we've included those on page 520, starting at page 522, where the employees explained and declared under penalty of perjury that these tickets were used for non-sales purposes. Well, with all that evidence, the department just rejected it, and I'm not understanding why that was rejected, because they don't explain, other than they just simply say, we don't believe you. Well, there's no evidence contrary to that. Like, so, in the absence of any issue on credibility of the employees and credibility of the documents, they have to accept the evidence that was presented, which is that there are sales tickets during January, which is the same year that or the same month that they did the spreadsheet that tried to show that there's all these inadequate records. We show exactly that there are records there which explain why, some of the sales tickets were used for non-sales purposes. And it's all in there. It's not, we've got both testimony and documentary evidence to back it up. And so, I mean, the fact that the department concluded that the records were inadequate based upon these missing sales invoices, I believe is unfair to the appellant, especially given, all of their admissions that I have just previously explained. And the second thing is that, we produced all the bank records and an analysis of the deposits into the accounts and all the backup, and that's it's like in starts at page 268, or wait, page 40 and on to 268. And so that's all, and I don't want to get into all that because obviously it's a lot of tedious documentation, but we provided the backup to show that there were plenty of cash deposits into the accounts over those 3 years. And one of the statements of the CDTFA is they rejected the bank deposit analysis because they said that the appellant has a cash business. Well, yeah, the appellant does accept cash, but you can see in all those bank records that there are cash deposits into that account. So, they just simply said, we don't believe you, even though there's actual documentary evidence which backs up what the appellant was trying to explain during the audit process. And so I think that where that leaves us with is this observation test that was conducted. It has a lot of problems with it, and it wasn't done pursuant to what the audit manual requires, which is typically, if you have a business such as a liquor store, restaurant, something like comparable to a medical marijuana dispensary, ordinarily you would observe the business for 3 days in a row and all day long. And so you would look and see, and you would get an accurate analysis of what the customers were and what the sales volume are. But here they only observe for 1 hour on 3 separate days, which is really not adequate. I mean, it doesn't give the accurate picture and the accurate estimate of what the actual sales were. And if you look in it, and I'm looking at page 614 in our PDF, which is the department's own, they have their little spreadsheet, you know, of how they did how they did the observation test. And you can see that some, on one day there's 0, another day there's 9, another day there's 4. So and this is only for 1 hour, so you can't really get an accurate picture of what the appellant's sales were by such a limited amount of observation. And that was always the position of the appellant throughout the entire audit process, which is this observation test just doesn't get you where you need to go. And I think really like the absolute proof of that is the fact that the department did an audit of 2013, determined that the records were adequate, and the reported sales were 68,000. So how, I mean, it's just their own admissions show just how unreliable this observation tests were and how unreasonable the number that they came up with is. So I think that, you know, given that, I think, you know, our position is we have 2 solutions of where you get to the correct number that's more reasonable, and that is based upon the department's own records. And the first is, and I'm looking at page 612, which is what the department reports as the reported sales and of the appellant. So the appellant has reported sales for the 3 years, 2010 to 2012, of 770,164, right? And then earlier, you know, as I explained, the department's own records, you know, they claim that the appellant's records in 2013 are adequate. It's 68,000 per quarter. So at 272,000 a year times 3, you get to 816. And so the difference is 816 minus the 777. You come up with the 38,835 is the difference. So that's really, and you know, we don't necessarily agree with this, but I'm trying to use the department's own records to come up with this figure. And if they want to use 2013 as their benchmark year, they have to follow their own admission, which is that the appellant's records are adequate for that year. So all you need to do is look at the appellant's reported sales. You come up with this number. That's 38,835. We also had an alternative, which comes up with a little bit more, but it's in our brief. And, you know, we don't agree with that either, but there's a difference based upon the department's bank deposit analysis. If you take the bank statement and then you subtract that, and you take the difference between the bank deposits and the bank statements, you come up with the 95,000, which is, you know, difference, which is in our brief. We don't agree with that. We don't agree with the department's bank deposit analysis, but if you take their own admission and you take their analysis of the bank deposits, the difference is 95,000. So either way, that's the solution. That's the more reasonable number that we come up with. And, you know, I think that when you're looking at this from a reasonableness standard, I don't, you know, whether the burden shifts to the appellant or it's on the department. I mean, at this point, nobody in the department ever reconciled their 2013 estimates of what the sales were with what the appellant's actual records were. They never explained why they didn't rely on the appellant's records to come up with these 2013 sales figures. And they just presumed that the records were inadequate, but they never really talked about it. And so at this point, you know, I think the fact that they didn't conduct this analysis and explain why they found the sales records were adequate, but yet they used this estimated approximation based on the observation test, like that shows that their numbers really aren't reasonable. But even if you find that they were reasonable in documenting everything, I believe that everything that I've just said really shows, like from the appellant standpoint, that we've met our burden of showing that this $2.5 million figure is highly unreasonable. And with that, I think at this point, I will defer and close my opening remarks, defer to the department to respond, and then I would like to reserve the right to be able to call Ms. Beluca to address any of the issues that are raised in the department's response.
So before we address that, I was wondering if any of my fellow panel members had questions for Appellants Counsel. So Judge Reidner, do you have any questions for Appellants Counsel?
This is Judge Reidner. I do not have any questions at this time. Thank you very much.
And Judge Lee?
This is Judge Lee. I have no questions at this time.
I did have a question for Appellants Counsel. So the department raised the argument that the 2013 through 2016 audit period is dissimilar from the audit period at issue, partly based off the fact that the locations changed. Did the location change at some time in 2013, or when did that happen, I guess, if it happened?
I'm going to defer to Ms. Beluca on that, but definitely not in 2013. But I would ask Ms. Beluca to answer that question.
This is Alexandra Beluca. I believe that location changed earlier than 2013. I can verify the exact date, but I believe that it was a bit before. I can tell you.
Okay, just take your time.
Okay, just one moment. I believe it was at the end of 2012, but I would have to find the exact date in my records because I mean I don't have it in front of me. I can research it further in my files.
Okay, we can go back to that.
Okay.
And as far as Appellants Counsel's request to call the witness after the department's opening and closing presentation, that's fine. Did you have anything else to add, Appellants Counsel, and before we move over to the department?
No, I just want to, the purpose of waiting till afterwards is that I'm trying to be cognizant of everybody's time, and I don't want to waste people's time unless it's necessary testimony. So that's the reason why.
I would like to add something, if possible.
Sure, proceed.
On page 1612, where there is a spreadsheet analyzing the sales tax reported by sales tax returns versus the sales per bank statements. I believe that there is an error where the department reported sales per sales tax return as 236,382. However, I believe it was 286,737.
So just for clarification purposes, could you refer to the specific column on that page again? I'm seeing a July 19th, 2019 date on the document, and then there's a comparison of sales table 2010, 2011, 2012, and there are 4 columns to the right of the year.
Yes,
Which one were you referring to again?
reported sales per SUTR.
Okay, thank you.
So that basically produced a greater difference between what's and this is, I believe, something prepared by the department. So this table shows the difference between bank records and what was reported, but I believe what's presented in the reported sales column by the department is not what was reported, actually.
Okay, so do you have the alternative figure?
Yes, I do. Let me tell you, just apologize. I'm gonna move the camera to see my file. For 2011, it's 286,737, and for 2010, it's actually 268,506, and 2012 agrees to what was presented here. So there is actually a large difference for 2011.
This is Judge Aldrich. Thank you. And just to remind everyone to please state their name before they speak. I know that I have not been the best at that this hearing, but it really helps out to keep the record clear. Before we switch over to the department, was there anything else that appellant's representatives would like to add?
No, Judge Aldrich, nothing. Thank you.
And counsel?
Not at this time.
Okay. Thank you. Department, are you ready to begin with your combined opening and closing statement?
Yes, sir.
Please proceed when you're ready.
This is Randy Suazo. Appellant is a California corporation and operated a medical marijuana dispensary selling marijuana and marijuana-related accessories. The permit commenced in May 2007, 2.5 years prior to the beginning of the audit period. The store was open daily and located on North La Brea Avenue in Los Angeles for the entirety of the audit period. Hours of operations were from 10 a.m. to 8 p.m. That's 10 hours a day for the beginning of the audit period, which was January 1st, 2010 through October 31st, 2011. And from 10 a.m. to midnight, that's 14 hours a day, beginning November 1st, 2011 through December 31st, 2012, the end of the audit period. Records provided during the audit include federal income tax returns for 2010, bank statements, and incomplete pre-numbered handwritten sales receipts. During the appeals process, appellant provided federal income tax returns for 2011 and 2012, and general ledgers for 2011, 2010, 2011, and 2012. Vendor purchases were not provided. During the audit period, appellant did not use a POS systems. Appellant tracks sales using pre-numbered sales receipt books. For each sale, appellant hand-wrote the sale information onto the pre-numbered sales receipts. The typical information included on the sales receipts were initial or first name of the employee making the sale at the top of each receipt, date of the sale, item description of the product sold, quantity of items sold, dollar amount sold per product, and total sales amounts. Customers' names were not included on the sales receipts. Appellant tallied and entered each sales receipt in an Excel daily summary schedule. These daily summary schedules were used to total monthly and quarterly amounts and prepare the sales and use tax returns. The department examined the provided sales receipts and calculated an average sales price of $24.60, Exhibit B, page 44, per transaction, which the department determined to be a relatively low dollar amount in comparison to the industry average sales price of $50 per transaction. The department also noted that the appellant's average menu price for an eighth of an ounce of marijuana is $50. The department's examination of the sales receipts revealed that rarely did the sales invoice show a purchase of an eighth of an ounce, which is considered the standard purchase amount for this industry. Additionally, as much as 50% of the sales receipts were missing. The department was not persuaded by the appellant's explanation that the missing sales receipts were used as scratch paper. The department reasoned that the appellant's manager would typically rely on the completeness of the sales receipts to ensure that employees were properly handling sales. For these reasons, the department determined that the sales receipts were not reliable for calculating total sales or the average sales per customer. Analysis of the reported sales show the daily sales averaged $766. That's $827,519 for the total audit period. This was adjusted upwards as there was a correction for one of the quarters in 2011. So this is already including that. Divided by 1,080 days. The hourly average sale was $75 for both 2010 and 2011. When compared to the industry average of $50 per transaction, $75 computes to 1.5 sales per hour. In 2012, the average hourly sales was only $53 an hour, or 1 sale per hour. Even though the business was open 4 hours longer in 2012, the yearly reported sales to the department was $4,000 less than in 2010. The department was unable to calculate a markup since there was no vendor purchase records provided and no cost of goods sold recorded on the income tax returns or general ledgers. The department also noted inconsistencies in the records. For example, Appellant also sold marijuana accessories. However, there were no purchases recorded for these items. The appellant also recorded some purchases of marijuana on their sales receipts, Exhibit E, pages 93 to 106, but no record of purchases are listed on the financial records. The appellant stated that its patients donated marijuana inventory to the appellant in exchange for different strains of marijuana, Exhibit B, page 36. However, the department's review showed no evidence of this. Moreover, the trading of one strain of marijuana for another would be considered a barter transaction, and the appellant would be responsible for the sales tax on those transactions at fair market price. A bank deposit analysis approach to determine sales was abandoned because the appellant did not accept credit cards and sales were either in cash or barter, at least per the appellant's statements. It is common for cannabis dispensaries to pay for goods and services, including wages and inventory, in cash. Therefore, it is presumed that the business does not deposit all sales into the bank deposits, and that the bank deposits do not represent all sales made by the business. The department's review of appellant's reported sales showed the sales to be consistent each year. Appellant reported sales of $272,000 in 2010, $286,000 in 2011, and $268,000 in 2012. Exhibit E, page 86. The department noted that it expected reported sales to increase as appellant extended its hours beginning November 2011 from 10 hours to 14 hours. In addition, the department's analysis of the federal income tax returns for the 3 years, appellant's exhibits, Exhibit 8, Exhibit 9, and Exhibit 10, show wages declining from $42,729 in 2010 to $37,656 $676 in 2011 and $30,547 in 2012, despite hours of operation increasing from 3,390 hours a year to 4,746, which is an increase of 1,356 hours, or a 40% increase. It is unreasonable for employees to work more hours, yet receive less pay. Recorded wages are also quite low when converted to hourly wages. Dispensaries usually have at a minimum 2 to 4 employees staffing the facility at all times, as a double custody control system is important to ensure that employee theft is not occurring and for employee safety. When the hours of the business is open per year are multiplied by the number of employees needed to staff the facility and compared to the recorded federal income tax return wages, hourly wages show that the dispensary paid only, for 2010, $4.20 an hour. For 2011, the dispensary only paid $3.47 an hour. And for 2012, the dispensary only paid $2.15 an hour. Review of the General Ledger's Appellant. Review of the General Ledger's Appellants Exhibits 2, 3, and 4 for the audit period disclosed that in 2011 and 2012, only 2 employees, plus the 100% shareholder of the corporation, were paid through the payroll checks, and the amounts were not significant enough to make a living wage. Review of the sales receipts provided for January 2011 showed that up to 10 employees handled sales. This is on Appellant's opening brief dated September 7, 2019, Exhibit K, resubmitted by the appellant on November 21, 2019. This would indicate that not all employees were paid through the payroll process. They were not paid through the bank account provided. Appellant's records provided failed to account for purchases and accurate wage expenses. If purchases were imputed to reflect the 100% industry standard markup and wages adjusted to reflect their true costs, appellant would have shown huge financial losses for all 3 years. Members of the statewide compliance outreach program, known as SCOPE, conducted a field inspection of the business prior to the commencement of the audit and issued an audit referral memo, Exhibit I, pages 205 to 212. The initial visit by the SCOPE investigator occurred on May 25, 2011, inside of the audit period. The investigator entered the store and observed 3 customers within 15 minutes he was inside. 2 formal observation tests, each an hour long, were conducted by the SCOPE unit outside the store. The first on Monday, October 1st, 2012, and the second on Thursday, October 4th, 2012. The first observation test recorded no customers entering the store. The second observation test recorded 7 customers entering the store. Based on the SCOPE unit's memorandum, the department determined that the amount of underreporting of sales was substantial. Due to the lack of records provided, the inconsistencies found in the records, and SCOPE's observation test, the department decided to perform more observation tests to determine audited sales. Each observation test was an hour long and conducted outside the business. The auditor counted each customer entering the premises. The test occurred on Wednesday, June 5th, Friday, June 7th, and Wednesday again, June 12th. The department counted 9 customers on June 5th, 4 on June 7th, and 5 on June 12th. All 5 observation tests, 3 observation tests from the audit and 2 from the SCOPE unit, were combined, and the average hourly customer count was determined to be 5 per hour. Exhibit E, pages 87 and 88. The average of the 5 customers per hour was multiplied by the number of hours the business was open for the year. Allowances were made for 1 customer entering the store and not making a purchase per day, and for the store being closed for 5 holidays. The department looked at the 45 different strains of marijuana that the appellant had listed on its menu for 1/8 of an ounce and calculated an average selling price of $50.33 per 1/8 of an ounce. Exhibit E, page 89. The average price was applied to the number of customers for the year, and yearly sales amounts were determined. Yearly audited sales amounts were converted to quarterly and monthly amounts as well. Review of the appellant's reported sales showed the sales to be consistent each year. Therefore, the department applied the audited yearly sales evenly per quarter, and compared them to reported sales. The comparison disclosed a difference of $2,250,196, which the department determined were additional taxable sales. The department also stated that during the observation test, the auditors were unaware that the location had an additional customer entrance at the back door. The department did not include the number of customers entering through the second entrance in its computations of average number of customers per hour. Therefore, the results of the test are considered quite favorable to the appellant, as the customers count is low due to the omission and no further reduction of persons entering but not buying was made. Exhibit A, page 10 and page 28. Based on the foregoing, the audit findings are reasonable and represent the most accurate estimate of the appellant's sales based on the evidence and documents provided. Appellant has argued that 5 one-hour observation tests are not a large enough sampling frame to draw a conclusion. Appellant has also argued that the outside observation test is not accurate as it counts almost every person entering the premises to be a customer. The outside observation tests were limited to 1-hour increments due to health and safety concerns of an auditor sitting in a car. Excuse me. In a car, observing for a prolonged period of time under a hot sun in the summer, and safety concerns of an auditor sitting in the car in the evening to observe, subjected to a higher risk of crime. Exhibit A, page 9. During the appeals hearing, the department did offer to expand the test and was not opposed to conducting the observation test from inside the appellant's facility for the entire 3 days. Exhibit A, page 23. Appellant stated that it was opposed to an expansion of the observation test. Exhibit B, page 43. If the appellant had agreed to further observation tests from inside the facility, the department could have gathered information in disputes such as average selling price, percentage of individuals entering but not buying, number of barter transactions occurring, etc. Appellant has not shown that the audit liability is overstated. Accordingly, the department requests that the appeal be denied. In addition, the North La Brea, from our notes, or from our understanding, the North La Brea location was closed a year after the audit period ended in December 2013. They received a letter from the landlord to vacate the premises earlier. The fourth quarter 2013 period, which is the only period that was under audit in the post-audit, reflects a winding down, was only for $47,800 is how much they reported, well less than other periods. This is due to a reflection of winding down of the business operations at the La Brea location. Sales for the quarter are dramatically lower than the quarters prior to it. The normal purchasing pattern of cost of goods sold would have stopped occurring, and only items on hand would have been sold as the appellant would have been attempting to rid itself of the inventory. Therefore, selection and variety of merchandise would be limited or no longer available, and customers would go to other dispensaries to purchase their products. In essence, the fourth quarter of 2013 does not represent what occurred during the audit period from January 1st, 2010 through December 31st, 2012. This concludes my presentation. I'm available to answer any questions you may have. Sorry.
Okay. So Judge Ridenour, do you have any questions for the department?
This is Judge Ridenour. I do not. Thank you very much.
And Judge Lee?
This is Judge Lee. I think I do have a question. Give me just one moment to look at my notes.
This is Judge Ridenour. While he's looking at his notes, Mr. Salzo, are you okay?
Yeah, and just get a drink of water.
Okay.
Thanks.
Take your time. It's okay.
It was a long presentation.
This is Judge Lee. I do have one question, and you might have addressed it towards the end, but I wasn't. You were cutting off from me just a little. Appellants mentioned that appellant had an argument that the books and records were noted as adequate for 2013, but the department used observation in 2013 instead of the books and record in 2013. Can you address that, respondent?
The post audit or the following audit did a block sample in 2016 and 17, which was when they, excuse me, allergies too, which was when they had a POS system. Their sales blossomed in the latter periods when they moved to a third location. I believe it was third location, I believe, is in Cahunga Boulevard. So when he did his block test, he didn't, when the prior auditor did the block test, he was concentrating on the latter period. When they had a different system input. Back in our audit, all they were doing, they had no POS system, no register. All they had was pre-numbered sales receipts. And again, half of those pre-numbered sales receipts were missing. Also, in the latter periods, they did have purchases, I believe. In our period, no purchases were ever listed. And if you would, again, if you would include the purchases along with what the true wages would have been, they would have had massive losses for all 3 years, which would not be reasonable for a company for this company. They would have been stripped of their cash flow. They wouldn't be able to borrow, being that it's a dispensary. It would be difficult to get a bank loan. So there's other, criteria, or not criteria. There's other factors that play into the following audit. Again, basically the block test is in the latter the latter portion when they were in the third location and they were booming.
This is Jason Parker. I'd like to add something also. The appellant's attorney did claim that the books and records for 2013 were adequate based on the comments in the subsequent audit. However, the subsequent audit was only started in the fourth quarter of 2013, so it didn't cover the entire year of 2013. The observation test that we conducted was in the second quarter of 2013, well before the subsequent audit.
Thank you. I have no further questions.
Okay, at this time, I'd like to go back to Appellants Counsel. Would you like to have witness testimony now, or?
Yes, I think I would like to first just respond to some of the statements that were made by Mr. Souza. First of all, there was a very long, well, not long, but a lot of talk about payroll and wages, and I've never seen any of that in any of the papers that were submitted in this appeal, nor any of the documentation in terms of the payroll records don't match up, or the employees were paid a certain way, or the shareholders. Like, I've never seen it anywhere. And so I'm going to ask, after I'm done with this, I'm going to ask Ms. Baluka if she can respond to it. Otherwise, if your honors are going to consider that testimony as evidence, then we would want the opportunity to address it and respond with documentation, because from what I'm seeing here, there's a lot of speculation, a lot of extrapolation about what could have happened, how things could have happened, and there's really not any backup documentation for anything. And so, I'm a little bit concerned about that we haven't addressed or had the opportunity to respond to that. And then the other.
This is Judge Aldrich. Just as a point of clarification, the department isn't giving testimony. Only Ms. Baluka is. The department's providing argument, and so we would have to be able to find something in the record to support that argument, just to clarify. Okay.
I appreciate that. That solves that that issue. And then now with respect to the discussion over the 2013 year, Mr. Parker's incorrect, because if the records of that audit actually date back and start with the second quarter of 2013. So, I don't know. It seems like the department keeps wanting to back away from what is a very, very clear admission on their part, which is that the sales records were adequate in the 2013 to 2016 audit. They accepted the reported sales tax for that year. Number two, as justification for using the 2013 year, they refer to the fact that the reported quarterly sales were 68,000 in 2013, and that it was consistent or close to what the reported sales were in 2012 or 2010 to 2012. So, I don't see where they've adequately explained why they didn't rely on the books and records of the company for 2013. And now they're trying to claim that, oh well, they only looked at records from 2017. Well, the underlying audit report doesn't say that. It says that it's reviewed those years and it's concluded that the books and records were adequate. So that it seems like they keep changing their testimony every time we make a good point, which is that the observation test that they did in 2013 is just not reliable. And the other argument that they make is somehow because they changed the location. Well, I don't know how that makes a difference, because they conducted the observation at the new location. And so and they came up with their sales figures based on the new location. So I don't know how that changes anything. Anyways, with that, I think I just want to now defer to Ms. Beluca to address some of the issues that were raised by the department and answer some of the concerns that they addressed. So, Ms. Beluca.
Sure, this is Alexandra Beluca. Regarding wages, in the early days, you can compare the business of cannabis dispensary to a current day cannabis dispensary. In the early days, which is actually 2010, 11, and 12, the owners were working inside the business, assisting however or whoever the employees were at that time. So that would explain the low payroll, because the owner was himself participating largely in store operation and managing the store operations. Additionally, regarding the purchases, it was set up by California law requirements that marijuana dispensary is supposed to be a collective, a nonprofit collective. So this dispensary operated exactly that way, where the different strains of cannabis were traded between patients, and where patients were provided a caregiving services and various meetings, because medical marijuana was used for cancer patients, was used for AIDS patients. Therefore, those patients who needed those type of services that were provided at the store were glad to volunteer and assist at the store. Therefore, this helped with burden of hiring and actually paying employees. In addition, Mr. Sposo mentioned about bank loans. Well, under federal law, medical marijuana dispensary is illegal. There is no bank loans, and until the federal government makes the business a legal business under the federal law, they will not be able to bank with the federal banks. So they will always have a banking issue until then. They will not be able to receive a loan in the terms of just like a normal businesses where they can go with a federally insured bank and apply for a credit line. So that's also an issue for them. In terms of operating in cash, only right now they are able to bank with credit unions, and they are able to accept the credit cards because only right now those credit unions started providing credit card processing services. The operating in cash was the only way of operation because credit card processing companies would not process credit cards for this type of business, as is illegal under federal law. So this is why this is basically an explanation of some of the issues and points that were brought.
This is Judge Aldrich. Thank you, Ms. Beluca. I did have some follow-up questions if you're prepared for that. So you had mentioned that there were trades of strains. I was just wondering, what was the documentation process for that? Was there any documentation process? Could you speak to that?
Yes. Yeah, there was definitely a list of each dispensary normally has a list of patients, and there is a database that has each individual patient's information, prescription from the doctor, as well as a traded strains, what was traded, who it was traded to. So there was obviously a record of that.
Okay. And then
a record of that.
So I guess in the exhibits, what could I look for to see that that was documented or how that was documented?
We never were requested by anyone to provide this documentation until even during the appeals, during the audit process, there were never a request for that. So this is the first time it's being requested.
And then, so the department made some arguments regarding what the average sale price was. Do you happen to know what the average, from your perspective, what the average sale price was?
Yes, let me just go back to I believe it was $24.60.
Okay.
I mean, we can say it's between $24 and $25 on the average.
And then, how long have you been working with Appellant? Were you working with Appellant during the audit period, or was this something after the fact? Just to try to understand what your personal knowledge of that situation is.
I was representing the appellant during the audit, and I was representing the appellant during the appeals process.
Great. And then I guess, so the Appellant's Counsel mentioned there's been 3 audits of Appellant.
Yes.
And I was just wondering, did record keeping requirements change? Did you work with an appellant to change any of the record keeping? If you could talk to that.
What exactly are you referring to? Are you referring to using the POS system?
Well, yeah, I don't know. Did they switch it to a POS system at some point?
Yes, they
Okay.
they started using the POS system, and they obviously, you know, as the business started growing, and it became pretty clear that you know, they are constantly being audited, and the records need to be clear and presented to government agencies. They significantly improved their practices in terms of record keeping, and usage of POS system is one of that. I mean, there are obviously other improvements, but you can't compare what it is currently to what it used to be back in 2012.
Thank you. I understand. And then I was reviewing in the exhibits. There's some banking documents, so the support documents that Appellants Council provided. At the moment, I'm looking at page 53, and it looks like there's some sort of ADP payroll fees. I'll give you a second to get there.
Page 53.
Yeah.
Okay.
So the December 23rd entry is a ADP fee or a payroll fee. The January 15th is a payroll fee. How are I guess my question is, how were the employees being paid? Were they being all paid through ADP?
Yes, I believe that a lot of payroll went through ADP. They also had security on site that was paid through the security company, and I mean, you would see the expense for the security. So those the security was not part of the payroll because it was
A
handled
separate
separate,
subcontracted.
right? But payroll was handled by ADP.
Okay, thank you. So Appellant Counsel, do you have anything else you'd like to add, a rebuttal or further address any of the questions that the judges had?
I have nothing further at this time. Thank you.
Okay, and my fellow judges, Judge Ridenour, did you have any questions for either Appellant Counsel or Ms. Beluca?
Actually, Judge, this is Judge right now. Actually, I did have a few questions, if you don't mind.
Okay, yeah.
Real quick, Ms. Beluca. So for your $24 average sale, I was wondering if you had any additional evidence to substantiate the average sale of $24 in addition to what's already been provided?
Well, the $24 sale is based on the actual records of the store that were analyzed for the entire audit period, you know, and basically that's how we determined that this is the average sale price.
Okay.
It's not based on some, you know, some industry average that, by the way, I mean, didn't change until this day. I just represented another store in an audit, and as a matter of fact, the industry average currently decreased to $45. So, I mean, for over 8 years, this figure, you know, stayed the same for whatever reason. So my point is that I do not know why is it accurate and how that was determined, the $50 figure.
Okay. No, I thank you. I was just wondering if you had any additional documentation for your
Mhm.
dispensaries. Also, on page 630 of your brief with regards to the decision, it mentioned that your dispensaries advertise that sales prices of $400 in the menu of larger quantities of marijuana and hash gave free bongs. By any chance, do you have records of giving out free bongs for such large purchases?
I would have to contact probably my client, because once again, this never was previously asked of us, so we never researched or had to answer this question. So I'm sure that they should have a record of that.
Okay, no follow-up is necessary. I did have a follow-up on your statement regarding to page 612. Back to that. So just to clarify to your testimony earlier, you were saying that the amounts on this Excel graph are incorrect for certain sales and use tax returns. Was I understanding you correctly?
Yes, the amounts presented in this graph, or as that show, say total sales and use figures, do not agree to sales and use tax returns. They do not agree what was actually reported. And Mr. Souza actually, in his presentation, reported different figures that are consistent with my records. So this graph is misleading.
So if I understand you correctly, you're saying that the amounts here are not the amounts you self-assessed.
That's correct. For
Okay.
the sales and use figure.
So if you could provide a copy of your filed sales and use tax return, I'm just trying to understand this, so bear with me. If you were to provide your sales and use tax returns for those tax years, they would not add up to those amounts that are in the Excel sheet.
That's right.
Okay. Thank you. And okay. Thank you. Those are all my questions.
And Judge Lee, did you have any questions?
No questions for appellant, but I do have one question for respondent that I'm not sure if this is the right time to ask now or if there's another opportunity.
Go ahead.
Okay. So for respondent, appellant discussed the average sales price of $24, and I know respondent mentioned that it might have been $50. Can respondent sort of explain the source of respondent's $50?
This is Randy Suazo. The $50 amount is the industry average. Most people buy an eighth of an ounce at the minimum, or on average. And
Okay.
$50 is the average of an eighth. And if you look at their menu items, which is on in one of the exhibits, let me go back to look for it real quick. Their eighth of an ounce, when they went through all 45 menu items, was $50.33. So exactly, or pretty close to exactly what industry average would be.
Okay, and do you have
I'm trying to look for the exhibit.
Is that in the exhibit I, the scope?
No, it's not on exhibit I. It's on. It's in the audit itself. Hold on one sec.
May I ask a question? This is Alexandra Baluka.
Yeah, just if you could hold off one.
Okay.
Mr. Aldrich, I found the exhibit. It is on exhibit E, page 89. It's schedule R1-12A-2.
They basically took down all the menus, all 45 menu items. The price of an eighth of an ounce comes out to $50.33, which is what we would expect.
Okay, and how does the department know that an 8 ounce is the standard amount or average?
When we've done other audits at this time period, that's what it came out to be in this area.
Okay, so the department looked at other audits for other taxpayers and did some kind of analysis or statistical analysis, I imagine, to come up with the amount.
There's also, I believe, in Exhibit A, page 30. There's a reference to a exhibit in there that says the average California purchase is $70. So the $50 is well below the 70, so it's also in their favor.
Okay, thank you. No further questions.
And then concerning one of the other questions about the difference in the how much they reported, I believe, for the first quarter of 2011. They initially had it on their transcripts as 18,982, but the audit cleared it up. And if you go to hold on one sec. I could tell you what the schedule number is, but I'm looking on Excel. I'll go back to the it's Exhibit E. I'm trying to get to it pretty quick. Exhibit E, page 86. And highlighted in yellow, they corrected it to show 69,337. I believe this is what she was talking about earlier. I was incorrect, but they corrected it later. So when the billing was assessed, it included, it was already addressed for the 69,000.
Does that conclude your response, department?
Well, for both responses, yes.
For those questions?
Yeah.
Okay. And Judge Lee, did you have anything further?
This is Judge Lee. No further questions. Thank you.
Thank you. This is Judge Aldrich. Ms. DeLuca, I believe you had a question or
Yes,
something that you'd like to add?
yes, Your Honor. Mr. Souza referred to menu items that not he, but the department determined the average sales price based on the menu items. Well, the menu items that we provided for the store support the average price of $24.60. And I'm not sure what menus are you referring to, Mr. Souza?
So you've indicated that the menu you're referring to supports the $24 approximate amount. What menu are you referring to in the exhibits? If you could direct my attention, that'd be helpful.
Are you asking me, Your Honor, or Mr. Souza?
I'm asking you, yes.
During the appeals process, we had provided menus, the menus for the store that would list the various items sold and their, prices, respective prices. So those menus supported the records of my client that the average sale price is $24.60. Mr. Soazo is referring right now to some menus that support the $50 average. So my question is, which documents are you referring to, Mr. Soazo? Because we never provided any menus that would support $50 average.
I understand you have a question for the department, and we can clear that up in a bit. But in the exhibits that we have in front of us, so Exhibit 1 through 12 from the appellant, or Exhibit A through I, what is the menu that you're referring to that corroborates the $24 average sales amount?
I do not believe that menu is in current exhibits. However, what was previously provided to the appeals, I mean, that's my question, because I do not see any exhibit that would support the $50 average price on the menu.
Okay. I guess I have a follow-up question for the department. What was the source for the menu that had an average of 50 some odd dollars? Was that the auditor at the appellate business, or how did that come to be?
If you look at Exhibit E, page 89, the auditor listed down the different varieties, the names, the price for an eighth. So the first one starts at King Louis, $55. Then you have Obi-Wan, $60. Stormtroopers, $50. On down to Lemon Diesel at the end is $50. Total is $2,265 divided by the 45 items listed comes out to $50.33. So basically, it was what the auditor saw on the screens, because these people had monitors that had the listings of the prices running all the time. And then it was what he saw or she saw, and basically transcribed them down, got the price for an eighth, did the 45 to divide it to get the $50.33, which is what we would expect for that price, because the market would determine the price. Otherwise, if you had something extremely high, they would go elsewhere.
Thank you. And Appellants Counsel or Appellants Representative, did you have anything else to add before we submit the case?
The only thing I'm not following the documentation for the $50. So I would request that we have the opportunity to submit what Ms. Beluca is referring to as the $24 support, just to clarify the record. Because I'm not, the way he's explaining it, I'm not seeing it in the page numbers that he's referencing.
Okay, and how long would you need that to be able to produce that document or documents?
We could probably produce it like tomorrow. I mean, like later this afternoon.
Okay. And department, do you have any objections to the appellant submitting those documents?
No, Your Honor. The only thing is the prices were on a screen, so I don't know how they would have how they'd be able to go back in time to 2012 or 13 to get it at this point. But okay.
Okay. And then what I have envisioned is that I'll give appellant a week to produce those menus, and then the following week, by the following week, the department may respond limited to those menus. Is that understood? Does that work, or does the department need some? How's the timeline, I guess?
If we could have an additional 2 weeks after you receive it, just in case.
Okay.
This is.
I'll give appellant 2 weeks to produce those documents, those menus, and then I'll give the department 2 weeks to respond, but the response is limited to those documents. Okay. And then the record will close at the close of business. Let me see. So today is the 26th, Wednesday. 2 weeks from today is the 9th of June. The department would have until close of business on June 23rd to respond. And then the record would close as of that date. Does that work, or do we need to make adjustments? Appellants Counsel, does that work for you?
Yes, that works.
And department, is that okay?
This is Randy Swazo. That's fine.
All right. And I believe Judge Ridenour had an additional question.
Actually, I did. Thank you very much. Since we're keeping the record open, I would like Ms. Beluga to please look into how many free bongs during the liability period were given out. And CDTFA, if you could please give us a transcript of something of some sort to verify the information on the SUTRs that were filed during the liability period as well. I would greatly appreciate it. Thank you.
Excuse me, this is Randy Swazo. Do you mean just for that 1 quarter, or do you mean for the entire audit period?
The one she was disputing.
I
So
believe
that's
she's disputing-
2010 and 2011, I believe,
Yes.
were disputed on that page.
Yeah, so I believe she was disputing 2010 and 2011. Is that correct,
Is that-
Ms. Beluga? This is Shereen
Okay,
right now.
that's fine.
This is Judge Ridenour. Ms. Beluga, were you disputing? Which ones were you disputing?
Yes, yes, I was disputing 2011 and 2010. The biggest difference was in 2011.
Okay, so just out of abundance of caution, this is Judge Ridenour. Out of abundance of caution, CDTFA, please give us for 2010 as well as 2011. Thank you.
Okay.
Okay. So is there anything else Appellants Counsel would like to address before I submit the case?
Nothing further, thank you.
Okay. Thank you, everyone, for your time and for being flexible with the hearing format. We're ready to submit the case. The record will be closed in approximately a month from now. Let me confirm the date. So I believe I said June 23rd, close of business. The record will be closed that time. And from that time, the judges will meet and decide based on the evidence and the arguments presented today. And we will send both parties a written decision no later than 100 days from June 23rd. The hearing calendar is now finished for the day. And thank you, everyone, again.
Thank you.
Thank you, everybody. Have a good day.